Okay. So it looks like Stargate, the Stargate project, which is a joint venture between OpenAI, SoftBank, Oracle, and investment firm MGX, is a $500 billion AI infrastructure play in the United States to be complete by 2029. Includes data centers and supercomputers.
I just don't buy into PR signals. How much money this, how much Stargate that. Masayoshi Son has slept very well, and we put that in the press release.
Yeah.
It's not a signal that I use for capital allocation. It means absolutely nothing. The world runs on PR, and I refuse to run with it.
Beautifully said.
I will be honest, when I first watched it, I was like, there goes Autodesk wasting a bunch of money on marketing because they don't understand how to do enterprise marketing.
Bricks, bucks, and bytes.
Guys, tell me if you can't hear anything when I hit play, right?
I heard it. It works.
Ladies and gentlemen of the press, thank you for your patience. Please welcome God.
Okay, that's not necessary. Thank you.
Well, so you're probably wondering why I called you here.
As you know, in the beginning, I created heaven and earth, but then you guys got pretty good at making stuff too. I mean, man, who's got two thumbs and mutual respect for humanity? This deity. So Papa's popping out to take it all in. Oh my me!
Come on, people! You're amazing! You are all powerful!
Oh, it's like she knows me! Stop!
So real. That was real. I mean, after all, with Autodesk, you can make anything, which means I get to enjoy everything. Nope. Ah, there we go.
Yeah. Okay. Autodesk? Should have used Autodesk.
Ladies and gentlemen.
All right, guys. See you next week.
Oh.
What did we just see?
Or I'll stop sharing my tab. Okay, guys, maybe that gives people a little bit of a hint as to what we might dive into today. But Dustin, good to have you back. Welcome back. How's the event season for you over in the US at the minute?
My life is chaotic right now. I've been to New Orleans, New York, currently in Boston, fly back to San Francisco this weekend, then fly to San Diego. Startup founder life. Fun.
Very good.
Successful trips so far?
Fantastic trips. Caught up with friends. I actually hung out with the Level Set team. They were acquired by Procore. So spent some time with Scott Wolf and his exec team. It was great. Huge respect for that whole company and everything they built. Yeah, some great customer meetings in New York and here in Boston. So
And a board meeting.
And a board meeting.
The highlight?
Maybe someday, Patrick, we talk about how we feel about board meetings. Might be a good conversation.
I would love that.
We could touch on it later. We have Clifton coming in to join us a bit later today, and I know he has some good views on board meetings. Maybe we'll get there. But today, guys, we're going to dive into a few topics we got to get through today. I hope we have enough time. Number one being data centers. Is it boom or bust for data center construction? A few interesting things happening in the industry. We'll talk about whether Autodesk is God, as you might have just seen from the opener to this episode. Patrick, you've done some interesting financial benchmarking on the leading AEC software companies like Autodesk, Procore, Bentley Systems, which I had the pleasure, which I hope people are now noticing the rhythm here, of listening to on my early morning run this morning. So thank you for that.
Way to get out there early morning.
Yeah, gets me going.
Yeah, you casually slipped that in, right?
Just want to make people. Just want to make sure people know.
You know him already.
Yeah. And Clifton will be joining us. Clifton, as most people will know, is CEO of TestFit. He has his words were civil engineering update. So I'm excited to learn what that is. And finally, there was some interesting discussions remember the super secret WhatsApp group that came up last week? about maybe a very, very large AI company setting its sights on AEC. So, shall we dive into some news that's been coming out of the data center world?
Show us the news.
Okay.
Mm-hmm.
So it looks like Stargate, the Stargate project, which is a joint venture between OpenAI, SoftBank, Oracle, and investment firm MGX, is a $500 billion AI infrastructure play in the United States to be complete by 2029. It includes data centers and supercomputers. But recently, there was an article released by, a few people. It came up on Bloomberg, and then it's on Yahoo Finance, and so on and so forth. And one of the partners, SoftBank, if you guys are familiar, they pledged $100 billion to Stargate, and apparently talks have been stalling with lenders, bank, private equity, and asset managers and potential backers, and no deals have been made so far. So there's a bit of anxiety around where the capital to fund this project is coming. And it looks like the Stargate project is currently stuck in its planning phase. Lenders and asset managers are holding back as concerns mount over rising costs and data center overcapacity. TD Cohen analysts warned that tariffs on AI hardware could drive up build costs by 5% to 15%, further complicating the financing landscape for SoftBank as it seeks backing from major players like JP Morgan and Apollo Global Management. And more uncertainty because you have a startup, Chinese AI startup like DeepSeek, undercutting established players, casting doubts over the long-term profitability of Stargate's data center work. In addition, Microsoft and Amazon are both scaling back data center projects amid signs of slower AI-driven demand growth. However, SoftBank CEO Masayoshi Son remains undeterred, ramping up internal resources to accelerate Stargate's rollout despite the delays, and there's a 20 to 30 person team currently working on the project to secure capital and move it forward. So, funny one from Elon Musk saying that SoftBank does not have the cash to fulfill its pledges and calls the project smoke and mirrors and tech hype nonsense. What do you guys think?
Well, I don't know about overcapacity in the next few years. I don't think that's the case. But there's been quite a lot of uncertainty in the last 6 weeks, probably, in general. So maybe that's the reason why some people are withdrawing their immediate interests in funding. But I think that will be just temporarily. So I wouldn't call it a day.
A day?
I'm not as sure that we're not building at a unsustainable level. Not because I'm an expert on how much compute we need as a society, but just pattern matching, like kind of how humanity operates and individuals operate. Like people tend to overreact and build and go into sort of like a state of euphoria. And that could be happening on a company-wide or just like an ecosystem level. And then you always see a reversion to the mean because there's some sort of steady state that we need to get to on the amount of compute we need. So I'm curious because we're building for what we think the compute levels are going to be required. And not that I believe that DeepSeek is incredibly more efficient because I don't really trust anything that comes out of China. But I'm not, I also don't know how much more efficient we can be or will be when some of these projects are completed in 3 to 5 years. And I tend to think that things become more efficient over time. So unless compute goes, we just need more and more compute and we aren't getting more efficient, then maybe we're building the right amount. But if we are going to become more efficient, then maybe we do reach an overcapacity. And then there's the other input that we have talked about briefly. The power consumption for some of these things is, I was talking about it with some people this week. Utilities are not able to support this, and it's going to start affecting constituents. And when I say the word constituents, that means people who vote. And this is going to become a political issue. So California, which I live in, my PG&E costs have grown like 50%. A lot of it's due to the fact PG&E owes like $30 billion in wildfire payouts. And they're recouping those costs by upping our utility bills.
Hey, over what time frame is that?
I don't know the time frame, but I do know the number is right around 30 billion.
No, sorry, that was unspecific. The 50% increase over what time frame?
Over the last 3 years. Wow. It's dramatic. So like these utility companies don't have a lot of wiggle room to adjust their costs marginally because they're already affected, at least in California, quite a lot. So I could definitely see a slowdown in 2 or 3 years. I think there's a lot of work taking place right now that's going to get completed, but this Stargate, 500 billion on top of what's already being done, and the fact that these haven't broken ground, I think could run into some financing difficulties. I don't think it's smoke and mirrors. I think that they're going to have real issues.
What's the cost of a data center?
It depends on how big
Or
it
the
is.
capacity? 8 to 10 billion for 1 gigawatt. Which is a lot, right? And there was a talk a few weeks ago that we're currently building 1 gigawatt data centers, but there is a need for like 10 gigawatt data centers. So I don't know if we can really project the demand, because this is probably going to be exponential curve of the demand here. It's definitely not linear, right? The more we develop, the more we use.
Yeah.
Who has the police joining them?
Oh yeah, mine lives in the ghetto, so he's just trying to make it to the end of the podcast.
On the same street as Buckingham Palace. That's the correct way to say that. So I don't think. I don't know. It's just my gut feeling that overcapacity is probably not the case.
We are building for an exponential growth right now, and my proposition is: what happens if we find more efficient ways to operate these models, like DeepSeek is proposing they can do? Does that change what the demand curve is going to look like from a compute perspective? And then we are still forecasting. I think the hyperscalers have a better understanding of forecasting, but then the Stargate project is not just building for hyperscalers, it's building for a lot of other potential entities that are going to want to operate their own compute. And so I don't think they have a clear understanding what that demand is going to be.
Yeah. And just to say that, I know we mentioned earlier that companies are putting out, but it still looks like Amazon, Microsoft, and Google are still putting committed a total of 255 billion in capex for AI in 2025. That's up from 180 billion in 2024. But by the way, capex doesn't necessarily mean data centers. It could be other infrastructure related to AI. So, and we know that Microsoft pulled the plug on a large project that was planned in Ohio recently, which made the news. So it feels like maybe people are not completely giving up. A lot of these companies said that that it was capacity management. Whether you believe that or not, I don't know. But maybe it doesn't look like that the companies are giving up. It just looks like, I don't know, perhaps they're just scaling back a little bit to wait and see what happens, to your point, Dustin, about whether we can be more efficient with the systems.
I'm waiting for Patrick to chime in because he probably knows more about this.
Patrick is going to shoot the breeze about grid infrastructure, I'm sure.
Okay, now that you have said that, I will just out of spite not go there, Owen.
Oh, come on.
No, I'm also trying to make up my mind what to make of, almost on a weekly basis, the news that we're all consuming about data center this, data center that, etc., etc. And I think we're all trying to navigate this. We all have certain primary information sources, but none of us have perfect information. The way I'm looking at this is purely from allocating capital into companies that would serve the data center construction, expansion, management, etc. I struggle with allocating capital to that, and it's not for a lack of opportunity. I mean, Dustin, I assume you see a lot of angel deals. I know Owen and Martin see their fair share of angel deals. I look at them from a VC perspective, and all of us have probably seen the opportunities for companies that would manage data centers better, construct data centers better, design data centers better, provide better racks for data centers. I've seen cooling for data centers. Then we've discussed the modular reactors for data. I mean, there has been no shortage of investment opportunities for technology growing on this trend. My issue has always been if I don't know what is the timeless portion of that market, I already struggle. If I then think that a market is actually overinflated over what the timeless portion of that could be, I struggle with the timing of investing. And so for the last 2.5 years, that's been the reason why we haven't allocated into that. So let me give you an example, right? So we've seen investment opportunities for companies that basically wanted to be developers, integrated developers that integrate design and perhaps even a subset of the EPC function for data centers. We've seen them in the US. We've seen one or two coming out of Asia. I don't think I've seen one out of Europe, but will only be a portion of time. And the reason why I don't want to go into that so far is because I actually don't know whether what I'm paying today as an entry valuation and sort of the short-term expectation of that company is going to be also the same case in 12 months, 24, or 36. Why don't I know that? Because it is extremely hyped, spiky, call it bubbly, call it whatever you want. And I'm unable as a market observer to project what that will look like. That's not because I'm less informed than other people. I actually hear it the same from construction and building materials companies that get contractor for these. They are saying, yeah, we have no visibility of what it will be like in a year. To give you another anecdote, an LP that I work with, building materials company, they have been contracted for almost $1 billion in work on data centers. They do subset components of data centers, and they tell me, yeah. And now all of a sudden it fell off a cliff for 2 months where we got no new orders for the time after. That's not is that a signal that the market will go away? No. It's to me just a signal that I have no idea what the timeless portion of this market will look like and how spiky and volatile it will be. And so for me, as a matter of allocating capital, I find that it doesn't fit my taste. I find that very unattractive. And last point here, it's because fundamentally I just don't buy into PR signals, how much money this, how much Stargate that, Masayoshi Son has slept very well, and we put that in the press release. Yeah. It's not a signal that I use for capital allocation. It means absolutely nothing. The world runs on PR, and I refuse to run with it.
Beautifully said.
So, Patrick, you sound like you haven't been consuming a Twitter timeline anytime recently.
Not since, I want to say, when did Trump's first term end? 21? Yeah, January 21, not since.
Patrick, I think you're coming towards me in what I am observing and pattern matching to other markets. It's like this new opportunity emerges. Let's talk with AI. And because the industry is behind, we overshoot usually. That's usually the pattern that happens. And what you're worried about is, okay, how big of that, how much more over are we? And what's that reversion to the mean going to look like? Because if it was just like 10% over, yes, it might be a good entry point. But you don't know if this is 5% or 100% or 500%. And there's no way to predict that.
Yes.
And so earlier on this conversation, all I was trying to say is that usually, because new markets emerge, there's a race. The industries overshoot, and there is some sort of come back to reality. And usually then we go below what we need, because then there's a moment of depression, and then we start figuring out what is the right sort of steady state. And that's just a typical pattern. So I don't know how much we've overshoot. I don't know if we've overshoot, but I would lean that the overall macros are overshooting, because that tends to be what happens. It just tends to happen like that.
I 100% agree with that. And in some of these in some of these trends that venture has loved in the past. I mean, let's go through it. Web3.
Oh my God. Talk about
Right.
the overshoot of all time.
When was this, 2020, Dustin?
Oh,
How much money do you guys lose?
every douchebag I knew in Silicon Valley was talking about their coin. And I'm like, what?
Right. And then, okay, so that went on for a year, two. I think, Barton, for you were an early adopter in sort of among VCs. This was like late 19 to late 20, maybe, where, I mean, I can still look at some of my friends' profiles. Back then, they were all of a sudden Web3 investors. Okay.
Simultaneously, you had the SPAC fad, where it was any company,
Right?
any P&L can now be public.
12 months. That was another 12 months. And so these things, I think there's proof to what you're saying, Dustin, is that the overshoot happens. But that to me is one aspect of it. And the other is there a timeless component to it? To Web3, I refuse to believe that. I refuse to believe the utility of Web3. I'm not hating or whatever. To me, I just haven't seen it in my life, and I have never seen it in my businesses, and I struggle to see it there. The same with specs. With AI, I understand that there's going to be fundamental value being delivered here, but I don't know what the timeless portion of that will look like. So it's sort of that I can't even judge the mean, right? So I can't judge how far it is, but I also can't know what the mean actually is that I should invest to with a 10-year horizon, because it is developing so radically quickly all around us. It's unbelievable.
Mm-hmm. Well, the interesting component is at some point, there is compute being allocated still to crypto and energy consumption. And I can tell you who's going to win when we start competing, because there is value creation with these models and generating societal impact. They're going to win. And so I don't know what that ever does to, I do know that there are companies that were leasing space that are going to get more competitive offers from companies that can take a model and monetize it versus people that are just mining or doing some other stuff for some of the cryptocurrencies today.
But then there's one additional constraint that we have here, and perhaps in other fads made less of a factor, that again I'm not yet there being able to judge it, and that is just the supply of energy and the transmission of energy that we haven't fixed. If you talk to physicists who spend a lot of time, I don't know, decades thinking about this, I have met physicists who think we're actually gonna max out and plateau on the available energy to mankind at some point in the next decades, while at the same time we're exponentially increasing the demand of energy to a. I mean, if you just go along with the projections of AI, I don't know if mankind ever had that amount of energy demand increase in its history. I don't know. So it's interesting when you were to map it like this, where some physicists think we will fundamentally, first principles, tap out on energy production, and you're going like this on energy demand. Mm-hmm. I find that very difficult to predict as a capital allocator.
So you don't think we're getting to a type 1 Kardashev scale society anytime soon?
I haven't thought enough about it to actually make up my mind. It's something that I spend a lot of time thinking about right now. Yeah.
There's some of a maybe an issue here as well. I was just speaking to someone just before we hit live here, who has been looking at these data center trends, and he mentioned that that the locations of the data centers where they are in places that are not necessarily well connected from a utility standpoint. So, to the point earlier, Patrick, about getting utilities to these locations is also very difficult. And there are that infrastructure play and actually being able to power these places is perhaps an issue that people are not really thinking about enough, or perhaps
from a grid balancing perspective, having data centers run as a baseload demand is actually a very good thing. So to integrate them into we call that the balancing energy markets, etc. In the US, you do that on a nodal basis. So for example, around a grid node in the US, they would typically balance. In Europe, they would typically do it on a larger level. To have baseload is valuable, both on the supply and the demand. So that's actually good. It's not very intermittent. But it is just so much that we're trying to do that overall, it's not going to be a balancing problem as much as it's going to be a capacity problem.
Do you think we'll see a construction slowdown as this demand starts? I mean, Patrick, yeah, you alluded to it earlier with the point of the materials manufacturer. Do we think that there'll be an industry? I mean, there'll be some form of void to fill, surely, if this stuff does slow down.
I lack visibility. Here's the final anecdote on this from me. I lack visibility on that to answer that, Owen. I want to learn with other people who know this better. But here's one anecdote that kind of shaped me last week a little bit. So a GC that I'm friendly with, owner of that GC, said, hey, look, traditionally we do other asset classes, but we felt we had to get into data centers. And we felt like we had, he didn't say alpha, this is me, but they felt like they had an edge there to develop that quickly. Okay, so they did that. So they started building small number of data centers for some of these large, players. And he came back, and that was last week, and said, we actually stopped that. So we will still deliver these, but one, the existing capabilities did not translate. So whatever we did in multifamily, in this commercial class, in these logistics centers, it did not translate. Two, our integrated design capabilities that make us have alpha on some of these others had absolutely nothing to do with it, because the owners operators refused to let us do the design. Why? Because they optimize for racks, they optimize for cooling, and they actually don't optimize for the way manufacturing or project management would have to happen. And so they realized they absolutely hated that, being given the design and not having any way of influencing how the design would perhaps be optimized for construction. And the third thing he said is these penalties are unbelievable in the contract. So they have a very high willingness to pay.
LDs.
They gave us very lofty numbers, but if we're delayed, they strip us bare naked. That's what he verbatim said.
Unsurprising.
So I don't know. I mean,
Dustin, any thoughts? I think the first one you mentioned, that it could have been a contributing factor if data centers didn't exist to a slowdown in construction.
Well, it certainly would have. I think it would have led to us to be into a depression by the classical definition of two negative numbers of GDP. I think that if we did not have that, all the spend go into data centers, I truly believe that would have happened. If there is a slowdown in data centers, it will substantially lower the overall GDP. I do know of GCs. In fact, I had a conversation about one that 80% of their work volume is data centers. So that company is no longer diversified. And so it'll be very traumatic if that faucet is turned off. I think that your friend is probably being a good steward of their business and not necessarily taking all the profits they can, which is a much more disciplined and harder thing to do. But if you are building for the long term, that's the prudent thing to do. And those are decisions that startups face all the time. I sit on boards, and oftentimes you will get requests from customers to build things that aren't part of your roadmap, which will be short-term revenue gains, but detrimental to your business long-term. And so I do believe that there is many businesses right now that have made short-term wins that will suffer the impacts. But there is a big if. If, for example, this growth keeps happening, then no one has to pay the piper.
Is it not also the case that like the building shell of those data centers is like 20, 25%, maybe 30% of the whole, in terms of the cost of the whole project? And also, if there will be like a recession in construction, that probably will touch only the larger companies which are involved in this, rather than like small guys, because they don't build these. And another point is we spoke with at least one general contractors who does 80% of around that volume is data centers. And what they were saying is that they are not worried if this is like a boom bust cycle and that they are participating in right now. But what they are worried about is the other general contractors who's never done data centers, but in the last 2-3 years, they started doing like 20% of the volume was data centers. So because they claim to be a specialist within this and they know how to navigate this market. Yeah, but probably those who started adding data centers to their revenue, these might be surprised when it dries up.
Yeah, I'm less concerned about the businesses. People go bust all the time in construction. That's the nature of the business. You can make a bunch of money and then you can go bankrupt. But
Hey, you
the
haven't made it
business
in
goes
construction until you go bust at least once.
But the implication is it doesn't matter if it's a big business or small business. They're employing tens of thousands, maybe hundreds of thousands of people for these projects, and that consumer spending goes away because there's less money getting to individuals.
That's true. Yeah.
Hey, shall we move on? I think there might, but I think soon there will be a.
What's the conclusion now? Like,
what's the conclusion? Well, like my feeling is that it's not overcapacity, and we can't really figure out what will be the demand. Like if we think about it 3 years ago, when the AI kind of started appearing, then you couldn't figure out what will be the demand today on the 15th of May, and there's no one on this planet who can assess that. But I don't feel like we are at the overcapacity. Uncertainty and people deciding not to participate in funding, I think actually this is because of the tariff situation and the whole uncertainty around the US. And once this clears, then it's going to be El Dorado again.
Am I the only one who has Mark from The Big Short in front of his inner eye? Have you guys seen that movie?
Yeah, I love that movie.
Yeah, so Mark is down in Florida, right, and did his little diligence there, and then he's coming back to the airport with the phone on his ear. Call Deutsche. It's a bubble.
Well,
maybe not that.
Let's see where we are on the bubble. It can be very, very long.
No, there's substance there. I'll admit that.
There's developing thing really. Time will tell, huh? As always.
Yeah. What's also interesting is the cost of energy. Actually, I don't know if we're talking about it now or maybe later.
Go quickly. We got to move on because people are dying to hear what we have to say about the new way of designing these things.
Oh yeah, they're dying.
Yeah. So I think Sam Altman had this chat with Congress, I think you call it over there, that US needs to invest more and more into energy production, whatever this energy source is. And when we strip everything to the basics, everything stems from the energy cost, how much things cost. That's like how much does it cost to produce something? It's the one, like a base layer is the energy component, right? Yeah. So I don't think it's a quick conversation because it's a conversation about nuclear and all of those. But yeah, do you want to go there or not now?
No. Patrick Khan, you have to say something.
No. I was proposing, why don't we get an energy guy on the pod next week?
I agree.
Yes. Okay. Okay, let's move on. So this next one, I think it was last Friday that this advert that we played in the introduction here was released by Autodesk. And here is the news. So it's a new campaign by Autodesk called Let There Be Anything, featuring Tony Howell. Tony Howell is a comedian, actor, fairly. I'm not sure at what level of fame or how you describe it, but very well known in the acting industry, as God. And the reaction to this ad has been very mixed across the industry. The aim of this campaign is to celebrate human ingenuity by drawing a playful parallel between divine creation and Autodesk design software. But it has sparked praise and criticism. Hey, Dustin, you take a big sigh. You want to quickly go before I spill the rest of the beans?
Oh dear Lord, I've been waiting to discuss this. Okay, so several takes on it. I will be honest, when I first watched it, I was like, there goes Autodesk wasting a bunch of money on marketing because they don't understand how to do enterprise marketing. And I was like, you know what? This is just a $5 million development cost, and they're going to spend a bunch of money marketing it on NBA playoffs, and it's a $50 million ad campaign. Great. And then I started thinking about it a little more, and I realized what a wasteful way to allocate marketing funds, and truly not understanding or empathizing with who your install base is.
Mhm.
And I don't have the data to support this, but in general, many people in construction lean more religious than the most of society. And to evoke that you are somehow on the level that God is impressed with your work is going to resonate poorly. So just from a strategic standpoint, I think it's just not thinking about who your customer is. And it's also not understanding you are an enterprise software company. And as much as Autodesk would like to be a household name and to be Apple's in the same vein as Apple, they're never going to be that. They don't service the consumer. People don't use it in their daily lives. You are an enterprise application. You need to talk about how you're making businesses better and driving real revenue growth or driving ROI or making these projects more efficient. And so I think that from a strategic standpoint, they do this a lot. They do not understand how to market their value propositions to their customer. And in lieu of doing that, they're trying to build a consumer brand. Now, this decision, they brought on the former VP of marketing or senior VP of marketing from Peloton, which is a consumer brand company. When that happened, I was shocked about it. But when you bring on a consumer brand company, this is a consumer brand play. This is not an enterprise play. This is a consumer brand play. And you get a consumer brand marketing strategy, and then you get the results when your consumer brand marketing play alienates half of society. And you can go on their Twitter and go ahead and see how this is resonating.
Someone called for divine judgment against the company.
It's just, I wish, back in my Autodesk days, I would have, if it was construction tech, I got to be a part of some of the marketing decisions. I would have never been part of this decision. But if I was in the room, I don't know how, this clearly had to go through all of the decision makers. And I don't know how anyone wouldn't just say, there's a lot of Christians and Mormons and Jewish people that own construction companies. Is this what we want to do? I just feel like someone would have raised their hand, and apparently not.
Can I play a devil's advocate a little bit here? What's the whole purpose of this campaign? Not to get attention, because they're launching this design and make platform at the minute, and attention is certainly what they've got, and perhaps that was the sole aim here, and they succeeded. But
I will go further. Autodesk does not lack for a voice with the customer. They lack for a solution for the customer. And there's a difference. They have sales reps talking to every major designer, builder around the world. They don't not buy their products because they don't know about it. They don't buy their products because they haven't solved their problem. That means you have a product problem, not a voice problem. That's why it's a bad decision.
How do they have this 91% gross margin then?
Hey, don't segue me just yet.
Yeah.
So, and remember, 2 weeks ago, I said I really liked where they're positioned in the market. That is true from a product perspective.
Yeah.
But when you're trying to drive top line, it's more about the product for an enterprise organization than they don't have a problem talking to everyone. Everyone knows who Autodesk is.
I want to build on that decision process that you were alluding to, Dustin. I mean, the four of us, we WhatsApped about this, and I was saying I have neither marketing competence nor religion competence. So for me, this is literally something I am as neutral an observer as anyone, and as amateur an observer as anyone. And I was saying to you guys in that WhatsApp chat, I cannot imagine that a ad of this, gravity would pass all these instances of decision making where people would overlook the impact of this. Because that would mean they have like 10 people like me who are not religious and who are not marketing experts. That can't be it. So to pass all these, it must have been conscious decisions. But I mean, I'm just doing exclusion principle here. Like that's the only Occam's razor thing that we came up with. in that WhatsApp chat, which means this was intentful, which means this, they wanted the controversy.
That's why we're speaking about them.
What's the business objective of the controversy? I'm asking myself.
Attention.
Yeah, I think it's a complete mismatch to the customer that they're trying to serve, right? Because although we was talking about it, it doesn't bring my feeling as a user of Autodesk any closer to them in any way in terms of the product
It doesn't
I'm using.
even advertise Autodesk. It's like it's just a random old mishmash.
Yeah.
And yet they did it, right? I mean, do you think that's what I'm saying, right? If you have competent people in the room and you have these decision-making instances, and yet you move forward with that, it's intentional. And probably people said, you know what, I don't know if that, it's going to sit well with part of our, and yet I'm doing it. So I'm asking myself, what is the rational objective here?
Yeah, I think it's like a shallow play, unfortunately.
I think it's just attention grab. Is that what you're saying?
Yeah.
To me, it has a little bit, I don't know, it reminded me of US president has a scandal at home and starts fires abroad. That's kind of the smell it gave me.
So they're trying to attract, distract?
Detract
I
attention.
will offer up I have many theories. I'll offer up what I think is the least negative theory. Okay. Because I don't want to say some of the other ideas they have. There is some credence to the fact that if you are a consumer company, your stock can trade for higher valuations because consumers are driving a lot of stock volatility. And if this is now a stock that more people know about, then Autodesk could start trading as a premium. And there is activist pressure. They just had an activist join the board. There is activist pressure. Obviously, they are doing it to see the stock multiples expand and the overall market cap grow. That is the best case scenario. That, look, the best companies that trade at the best valuations are household names. That's the best scenario I can come up with.
When was the ad released?
Friday, I think.
This Friday? That's last week.
What about the 9th of May, perhaps?
Yeah, so the stock is up 2.3% in the last 5 days.
Boom!
Every stock's up 2 points.
That's true.
Yeah, their stock got more up once they added the word AI 100 times to their last annual report. So that move was actually like 9%, I think.
Hey, a lot of AI on a lot of their desktop tools, right?
Patrick, sounds like you've been doing some reading of this of Autodesk annual report, and so in your recent episode of Practical Nerds, you done a live working session, which I found fascinating, by the way, to see how you think how VCs think.
I don't recommend to anyone to listen to that.
I'm not
we said
listening
it's
yet,
like watching. No, it skipped to the second part unless you like watching glue dry. That's what the first part was.
It wasn't quite that bad, by the way.
I always watch you guys. I watch on the live screen and with cola and chips.
Great. No, what we did is, right, so Shub and I were sitting there, and 2 years ago we did an AC, so public AC SaaS benchmarking. Public because obviously these are numbers that, are out there for everyone to see. And we compared it to a set of other B2B software companies. So we redid that this year just to see how Autodesk, Procore, Bentley have fared since. And we updated the peer set, which was Adobe, Intuit, and ServiceNow. And you're right. I mean, we sort of spent 30 minutes entering the data while recording ourselves. So that's the dry and glue part.
I particularly enjoyed the keyboard tapping.
Thank you. Yes, but then we did spend 40 minutes interpreting it, and we released it. And if you want to throw it up there, but it's really interesting. So Autodesk has very solid financials overall across the whole P&L, across the cash flow.
Can you share it maybe?
I haven't. I'm afraid I have not got the...
You have not? Oh, come on, it's public. I can do it, but...
they really do. They're a cash flowing machine. Their financials are pristine.
It's terrific. And then the others don't necessarily have that. So we had the 91% gross margin, right, which we had also debated and mentioned here. Hold on, where did I put this?
Did you do an analysis of their S&M spend for their CAC? Because like I would.
Yeah, we did. Okay, here we go. Let me share my screen. Hold on. We have 5 minutes until Texas joins us.
Yeah.
All right. So we're not going to bore here too much. So here you see the gross margin. How do I get this little box here away? Hold on. This. All right. So revenue growth, right? Autodesk, Bentley. I mean, for companies of that scale, several billions of revenue, I think 11% is terrific. I mean, that's very, very good. You're in Adobe League. ServiceNow is doing a lot of push right now. Procore is still 26% last year, but as Shu pointed out, actually Procore has released a guidance that for the next quarter, the year over year is only going to be 9%.
Yep.
Gross margin, okay, all of them sort of in the SaaS territory where you want to be. ServiceNow has more of a service component to it, hence the name. So 79, I think for a business like theirs is very good. Overall, all of them are where you want to be, but check out Autodesk. I mean, that is a gross margin machine. So here's the rule of 40, which is basically you take the growth rate and you sum it up with your net profit. So here we did the operating margin. That's why we did the adjusted rule of 40 to give Procore a fair fighting chance. Autodesk, Bentley, all of them are near the 40 where you want to be. Procore not. Operating income margin for Procore is -12, so the company is still not earning profit. The others are very profitable. And here coming now to the intensities, Dustin. So S&M intensity for Autodesk, 33 cents. So that's what Starboard, I think, is critiquing.
Patrick, what does this mean,
Procore,
S&M intensity?
This is the sales and marketing spend divided by your revenue.
Okay.
So basically another way, how much sales and marketing do you need to spend to acquire and retain $1 of revenue? That's what this means.
33%, that's quite a lot, yeah? Or
yeah,
not?
check out Bentley. I mean, I was surprised by that. That's very efficient.
20.19?
Yeah. And then Adobe and Intuit are product-led plays, right? I mean, if you can actually be more efficient than Adobe and Intuit on sales and marketing like Bentley, I think that's worth highlighting.
What's super interesting is when you look into S&M intensity and then compare it with the revenue growth, these are these should be ideally the same, or obviously S&M intensity should be lower than the revenue growth, ideally. Procore has it horrible, I think.
Yeah, and you know, they also showed the largest growth last year, so I think that's a good observation on your part. Then it's not just S&M, so there's R&D intensity. So Autodesk also maintains still a fairly good amount of engineering, as does Procore. The other, so here if you take Intuit and Adobe, which are more of an ecosystem play, closer to what Autodesk is than perhaps to what let me not judge, but overall, you see how these ecosystem plays actually become fairly efficient on R&D. And then here, we also had the G&A intensity somewhere. Where did we put that? I think we skipped that here in the article. And then Dustin, your point, it's a cash flow machine. So this is the free cash flow divided by your revenue. So how much of your revenue actually you convert into FCF? 26% for Autodesk, 31% for Bentley. Terrific. And you're here in a very, very good company. I mean, Adobe, Intuit are exactly where Autodesk and Bentley would be. So Procore is at 11%.
What your
Still
analysis
not bad,
probably isn't including. Autodesk free cash flow is going to increase over the next 12 months because they've been cutting headcount. So that's I mean, 2 weeks ago, without the data, I said I really like where Autodesk stock's positioned. And now if you compare it against where Procore is, it's kind of obvious just from quantitative
That's
analysis.
a great point. This is all trailing. We haven't used guidance. That's right. And then just for the last 60 seconds here, so I always like to look at the efficiency over employees. So this is annual revenue, not ARR, but 400,000 is good. Adobe 700, Intuit 900. I mean, these are just crazy benchmarks that I think if you can hit them, you're just a machine. This is where Bentley lags behind, interestingly. So they have a ton of employees, although they were kind of efficient on the intensities. And then look at the valuations. I mean, I was very surprised to see that Adobe on the trailing revenue is like 7.6x. Autodesk is where you expect a SaaS player to be with these numbers. That's a 10x. That's on the trailing revenue, not on the ARR forward.
Yeah, it's an interesting 10x, and then you just implied a 25% free cash flow margin. So you're really getting like on the cash flow it's a really attractive stock.
Which one?
At 25% on revenue cash flow. So you're getting a very attractive stock from a free cash flow perspective.
Yeah. It's interesting how Autodesk and Bentley are very close to each other in that regard.
Yeah.
Okay, I don't mean to cut you short, Patrick, but we have
Procore is
special-
trading. Procore relative to Autodesk on a free cash flow perspective is actually trading at a premium, and their forecasting is actually going down. So it's trading at a premium right now to Autodesk.
Okay,
Perfect ending.
thanks for that, Patrick. Right, next up we have Clifton. Hey, Clifton.
Hold on, are we doing this?
Yeah.
Hey,
I have to admit, I didn't. My thingy hat got taken away, so I have to wear a blippy one instead. But
What did y'all do to Dustin when he joined? Take your other hats off, or
yeah, well,
they told me to go buy one, and I said they don't sell cowboy hats in Boston.
That's not true. I told you to get an Aggies jersey.
an Aggie? Oh, that would really piss me off. A great way to start my morning.
All right, look, guys, take note of the details here. Jacket. This is Clifton I'm referring to. He's wearing a jacket, and he has some interesting statements in the background. He didn't quite use a whiteboard, but building on the momentum from Mike last week, we have some. So, Clifton, what's going on in your background there? Could you explain this to us?
It looks mirrored on mine, so maybe you can't see. I don't know,
Yeah, it's mirrored. Yeah.
CAD is greater than BIM. 2D is greater than 3D. And paper is better than digital.
That's very bold.
Yeah.
Do we need
Are you
some?
going to justify these claims?
No, I was just told to have something controversial. I wasn't said. I didn't. They didn't say I had to justify my claims.
Dude, you don't know this because we're literally just finishing up on the recent Autodesk ad, and now you come this. I would say you're beating the Autodesk ad on the controversy there.
Oh gosh.
You just pissed off every VDC person ever.
I mean, it's why? Just what's the point? I don't want to rehash what y'all just went through. Arguably.
What did you think about the Autodesk God commercial?
I didn't understand it. Like, yeah, I just didn't get it. I think it can only go poorly. I don't know.
Yeah. Clifton, what's happening in TestFit? Civil, you left me a very cryptic message. It says civil engineering update from us, and we're like dying to hear what this means. So go ahead.
Yeah, so we're fully out of minimum viable product stage for our civil engineering tools. I used to say we're no longer like a flat earth company. So maybe there's a better way to put it, we're into the grade,
What's the tool about?
But what was what?
What's the tool about?
The tool, so let's say you have like a massive industrial facility and you're trying to figure out how to get the 30% of your cost bucket, which is dirt, down to like 20%. So we're trying to like regrade the whole site in real time, depending upon like what the parameters are for where your finished floor elevations need to be. So TestFit's a feasibility company. We're basically just lowering the cost of dirt. We're trying to, at least. So civil engineering feasibility tools for architects and developers is now a reality.
Mm-hmm.
Can I stop pitching my company and can we start talking about other stuff?
So why is paper greater than digital?
All right. So let's say you want to have a permanent record of a thing that you thought or a thing that you wanted to have written down, and you didn't want to rely on electricity to save that piece of information. You can't beat paper. Like, the power goes out, you lose all your laptop batteries, you've got a permanent record of a thing that happened at a point in time. So that's one argument for paper.
Very good.
Are you preparing for the apocalypse?
mean, you must. I mean, Autodesk is asking God for help, so something must be happening.
It's fair.
Yeah. I mean,
Oh my God.
hi, Clifton. What about the digital record? Is there in the cloud?
And you have no idea where it is. I mean, it could be in Maryland. It could be in, I think ours is in West Virginia. I don't know where our boxes are. We rely on Amazon for our cloud, but it's still a physical place. So, you know, you're saving all your information in the cloud. You're still saving it somewhere physically. I know Dustin's got the cloud company. He should answer that one.
The cloud is everywhere. It's nowhere.
Omnipresent, just like God.
As long as Amazon doesn't fail, the cloud exists.
Yes. Yeah. It's pretty great. Like we turned off local saves for me at least on TestFit. So now all of my saves are from the cloud. And so I have the app installed on 5 different computers. Now it's, you know, I just get up to date information.
We'll talk about
nice.
that, Clifton. You started as a desktop and now you're migrating to make it.
Yes. Yeah. The data store now is all cloud based, but the compute for solves is local.
Okay.
And we like this real time feedback loop. So you basically just can hop in the app and you can get 10,000 solves right there locally. Yeah. And the topo stuff, you're auto grading your dirt, it happens in real time. So you're getting feedback, you know, oh, here's what's happening.
Well, why the drive to get into like lowering the cost of dirt?
All right. Well, so we started in high density multi, and there's not a whole lot of, you know, the dirt there is how many grades below grade are you going in your parking structure, and there's not a whole lot of finesse in your dirt numbers. And then we get into garden apartments and lower density housing and tract home planning. Those things all require a lot of, you know, dirt mitigation. You know, so it could be 30% of your cost. If you're in Atlanta, it could be 50% of your cost. And then we did industrial, you know, product market fit basically required that like that is 30%, and you're also trying to achieve like the largest possible, you know, building that you can get. So it's a bit of like a recursive effort to get to like what the industrial guys want on their dirt. It's all like slightly different problem per building type, and then getting the roads to grade correctly too, because there's you know, max slopes that you can go when you're inside a site relative to outside of a site. Boring myself talking about dirt, but like, guys,
hey, yeah, man, don't worry, we're excited. I was gonna say
it's like the new frontier. Like if you can't do dirt, you're not
you're doing God's work. God's work, my man.
The dirty work.
Hey, Clifton, what is so wrong about BIM right now that you would prefer CAD solutions?
BIM's upstart costs are very, very expensive. I think we're heading towards, you know, a lot of smaller architecture firms. So, you know, everybody doesn't really have this capability to go build out templates with all the families and stuff that they need. BIM's a very complex piece of software for like a loss leading architecture firm to really, you know, want to start investing in relative to just drawing something faster. And there's pretty interesting CAD technologies out there that are not what I had, you know, when I head into practice that I'm fairly confident will be successful.
Okay,
and I know we're. Oh, go for it, Owen.
I was gonna say, it feels like a seasonal topic right now because Dustin, you had a board meeting yesterday. Clifton, you said you had one last week. Do you have any hot takes? I know I'm throwing meat into the lions here. What's your view?
Don't worry, it's only live.
What's your
You want me to talk about the private corporate record publicly?
Yeah, exactly. That's what I was hoping you was going to say.
All right, Dustin's on his second or fifth company. Let's let him answer that one, and I'll follow his leadership.
What's your most favorite thing about board meetings?
I can answer that. So my take on board meetings is they are very good for helping a company's leadership team get together and evaluate their business so that it can be distilled down for people to understand. And that is a very good practice. So early stage companies, I'd like them to do a board meeting once every other month because things change very quickly in early stage. And as you get more mature, it moves out to every 3 months. So that practice in and of itself is where all the value is extracted, is getting that team together in order to present the data. What actually happens in the board meeting, you extract very little value out of that. And I have seen board meetings that are better or worse, but generally speaking, there is not a lot of value to extract during the meeting itself, but the lead up process is actually very good. I really do think that creates value.
Yeah, I would agree that all of the meetings and conversations you have around the board meeting is where you're getting the exchange of information that's substantive. And as a first-time founder, like I don't want all of their open criticism to necessarily be in the corporate record. Like you have to create opportunities for your investors to weigh in a way that is constructive for you. And if you don't create opportunities for that to happen, they're going to be possibly frustrated. And your job as the CEO is like to find as much value as you can for your shareholders, which are these guys. So I've never had an adversarial board meeting because your goal is, well, further I make it in, the goal really is to understand the outcome of it, like before you even get into the meeting. That's like proper corporate governance, and it's not fun because you're not out selling and you're not doing R&D. Like it's maintenance. It's like going to therapy.
I like you guys' answers, but I think we need a German take.
I don't know if I can offer one. I have fairly, so on my sentiment towards boards that I serve on, that I've served on, that I might serve on in the future, I'm slightly on the negative sentiment, but generally within the neutral. But over the years, I've basically learned the following, and I'm trying to implement it for myself about boards. Boards and the whole corporate governance is there to help the management allocate resources and generate resources through prime decisions. And secondly, it is about removing constraints. That's how I'm approaching the work with founders, and I think the board is the most formalized expression of that. Unfortunately, I find that in almost no board. The boards that I find almost never are about, hey, let's discuss resource allocation, resource generation, and let's discuss how we can remove the constraints that impede profitability, margins, or growth. What I find is, hey, I have an opinion about this, Clifton and Dustin. Why don't we change our company logo? And you're like, as a manager, what the fuck are we discussing here? Or, hey, have you considered trying this distribution channel? It really worked in my other company very well. You know, that company is a consumer company selling to ice cream trucks. But hey, let's give these managers a really informed opinion about distribution channels. And I unfortunately, founders that have known me over a long time, I lose all poker face. In these meetings, I literally to them become very legible. And on best case, I'm switching off. Worst case, I call them afterwards and I say, hey, we have to change something about this board. But I think my Vinod Khosla, everyone should read just what Vinod says about this because I subscribe. 70% of investors destroy value, 20% add no value. The other 10% are great. How do they destroy value? By saying things that they have no damn expertise on. The best thing that your investor can say is, Dustin, Clifton, I don't know. That honestly is a much better answer than trying to offer opinions. Let's just focus on what resources do we allocate, how do we generate new resources, fundraising, exit, and what are the constraints that we remove. If your board does that for you, I think it's a fantastic board.
Awesome. Hey, Clifton, what's the 2025 plans for TestFit?
What are our plans?
What's
or the next 90 days?
Yeah.
Next 90 days. Well, we have, I'll call it 80% of our premium configurators that have suffered the lack of, dirt solver for the last 4 or 5 years. So they have that now. So we're figuring out how to package, and sell the integrated solution, which is, architecture design, dirt design. I've got a third kid coming August 3rd.
Nice.
So,
Nice.
Crazy.
I'll be out of pocket for a bit. Let's see, we're going to keep building upon this sort of pod structure that we've started to build in our corporate culture. But really, it's pairing like a go-to-market expert or leader with an engineer and trying to get feedback loop, from very specific either prospects or renewal customers, directly into, production, some of their feedback. That's one of the most popular kind of updates to our org that we've done ever. So we're going to, try to figure out ways to keep doing that without fragmenting the process too much. Raising money all the time, which is fun.
Nice.
Is there anything on the list that I should be doing more of or less of? Or Patrick, what's your read? Am I doing the homework right?
Sounds to me like it, and I think you're actually you're toned down a little bit too much. I mean, through the chats we're having, it sounds to me like you're actually clicking with TestFit. I mean, it's okay to do a little bit of hoo-ha marketing here.
Yeah. I mean, so we're hitting product market sales fit, which is like better than product market fit, because if you have product market fit, you're getting a bunch of users and you haven't maybe exactly figured out how to catch on to the sort of momentum that they're spinning off. And I think we've figured it out now through variety of ways of improving our go-to-market process. I don't know.
You've been posting about members of your sales team actually generating $1 million in ARR for you over, right?
Yep. We have 3 now that have passed the $1 million mark. We're pretty interested in figuring out how to keep getting to a place where we can command, the right Series B and the right, kind of new round for TestFit, and what does our next chapter look like? I've done a lot of soul searching, with writing stuff about BIM, which I never thought I'd ever do. And the vision is just going to keep growing, and it's looking like we're going to have a third act, or at least a shot at doing a third act, which is delightful to me.
Yeah.
To get to,
How big's the team now, Clifton?
About 31 right now. Yeah, 31.
Maybe
That's a good size.
Yeah, so tell us, what's the secret sauce for those sales? How do you go about them?
How do we do sales?
By the way, we will be speaking to Jack and Laura on Bricks and Bikes next Friday.
Well,
so.
They're the right people. Ask Laura that question. She'll give you the full answer. I'd say like number one is just like trying to segment who the person is coming in and figuring out where they want their value, and how you can get that person in front of the right person as quickly as possible. We have 15 different submarkets that we serve, and everybody wants something slightly different.
Cool. Clifton, do you have to go?
Do I? Yeah, I can go. If you
Oh,
guys,
yeah,
if
no,
you're
I'm not
bored,
kicking
bored
you
of
out.
me.
I'm just conscious we had you for 15 and we've taken 5 extra, and it sounded like your calendar was
They're
tight, so we
British.
appreciate you coming.
I can keep going for another 10 minutes.
All right, sweet. Let's keep going. Do you want to join us on a debate about Y Combinator?
They didn't accept us, but
You should be very happy they didn't accept you. All you would have got out of it is 7% dilution.
Okay.
That's it.
Okay,
Only?
Dustin, 2 seconds.
Only?
That's a spicy take right there.
Before we
I
go,
am
before
happy
we
to
go.
justify my spicy take on them.
Okay, before we go, so this came to my attention this week that Y Combinator has says Google is a monopolist that has stunted the startup ecosystem, and it looks like they're doing some form of I don't want to say it's a court case or something like that, but anyway, they're having some kind of spat with Google, which basically they say they prevent success within the startup ecosystem, specifically in relation to search. And then Dustin jumped on and said that this is a very interesting topic and he would like to discuss it. So, Dustin, you already gave us a little bit of a flavor of what you think about Y Combinator specific. Is this specific to the AEC industry or Y Combinator?
Well, AEC and in general. I mean, I think Y Combinator is almost predatory to early stage impressionable entrepreneurs and what they do and the amount of equity they take relative to the value creation that they do for the startup is insane. And I don't know how people can be associated with taking that much equity for what they ultimately provide. And then the egos that they are manufacturing within these startups is out of control. Like you talk to some of these founders and it's like, I'm the greatest thing since sliced bread because I got accepted into YC. YC now has 4 cohorts of like 50 people. It's much more of a manufacturing process than it was. Like when I started building Connect in 2012, it was one YC group that was like 20 companies. So it was very elite and special. And it's morphed into it's just a manufacturing process. Ship them through. Some of them will be great. Some of them won't. And we're just playing the odds and the expected value, and we're going to make our returns.
But there's, all right, well, I'll take the other approach maybe is like for someone that doesn't understand what finance is or doesn't understand what a sales org is or doesn't understand marketing, like a lot of this stuff, like I was clueless to, like upon entering, trying to sell TestFit. And yeah, maybe that would be worth 7% to have the mentors that you need in your first company get you to a place where you could turn that 7% into something meaningful. But maybe the thing is that, like, in hindsight, once you have learned a lot of this stuff, that, you know, you need an attorney to do X, you need a banker to do Y, you need an insurance broker. Like, there's a bunch of bullshit you got to do outside of the limelight that, like, you need a mentor or someone to help you find your way. And yeah, maybe if someone doesn't know anyone, 7% is fine. I don't know.
I could see a justification for someone in South America where there's not a lot of mentorships. But when I hear of startups from New York and from Silicon Valley and everywhere else, and when they say those reasons, that actually scares me, and I'd probably never write a check in there, because at the end of the day, I want someone who's a founder to be very resourceful. And all of that information is a few clicks away to discover it. Discover that you can work with law firms. Discover they'll set you up for free. Discover they'll write they'll incorporate you. Discover you should be able to be fluent in the terms of financing. Like, it's not that hard. And it is almost a litmus test if you can't pick these things up, and you got to be told. So,
I saw a company on LinkedIn this week giving away free backpacks just to YC companies.
Patrick, do you invest in YC companies anymore?
All the time.
You are putting me on the spot, sir, but this can't be litigious because I'm going to answer fact-based. No, we're not. We're not. And we're also, by the way, not investing in first checks as a safe note anymore.
Yeah, safe notes are criminal as well.
Yeah. So we're not doing that either.
Why is that?
YC
Because
invented it because they're criminal.
It's by association then.
No, we actually think that the whole safe note movement,
It's
not
not that
only
safe.
that, but also coupled with, I think the term itself is already funny, but coupled with capital availability, liquidity, generally venture becoming a very propagandist asset class and less about substance over the last 10, 15 years. When we took all these three things together, I think we've created an ecosystem which is more about selling and propaganda, and VC firms have their fair share of blame here. And unfortunately, that has created a secondary effect of, hey, let's have less transparency, less oversight, less, truth about substance, let's have less shareholder rights. And we've just basically said at some point in Fundamental, no, we don't want to be necessarily in relationships that make that a condition, that you accept terms where transparency, governance, shareholder rights are a requirement to get involved. So we basically just decided it's not our taste. Doesn't mean it shouldn't be good for the founders, right? So that's something I don't want to be a judge of. But for us as a shareholder and sort of as participating in this ecosystem, we think it's better that we don't do that anymore.
My
There's
personal.
already a ton of uncertainty, like if you, we've never done a convertible note, but everything's been priced equity, and it's sort of, there's your flag in the ground. You're either for it or against it. And, ideally you're not spending 75% of your time raising money as a founder. And I don't know, if you are, there's maybe other problems, but having that certainty, I think, like it gives you a lot of velocity, like where things are.
But you can provide
experience.
certainty in a convertible note, or at least some sense of certainty. The way the safes have become, there is no certainty at all. Yeah. It is, this will convert. There is no interest rate associated with it. There is no time frame associated with it. It is purely, here's some money. We're going to go build something, create value for ourselves. And then when it converts, you participate in that round at a minimal discount. And YC pushed this, but YC also takes money before the safe, which is also interesting. If it's good for the goose, it should be good for the gander. So I think it's very interesting that they propped up this vehicle that it's a convertible note. I mean, there's some minute differences, but without a cap and no interest rate. And yeah.
So it seems like one side.
That's I won't sign. I've signed one, and the few that I've signed, I've just immediately regretted that.
What happens when they convert? Like, what, you just get whatever you want as the investor, or
you get a discount in that round? It could be 5 years later. They could be worth $100 million. And cool.
That's a lot of uncertainty.
And there's also usually no time frame. I have one company put on a safe. This is 5-6 years ago. I'm like, what are you guys doing? They just raised more capital.
Yeah,
Thanks, guys.
That's the thing with safe notes, right? So it doesn't give the you're technically not a shareholder. It doesn't give the safe holder any kind of certainty over whether the company just keeps on raising safe notes, etc. So you can actually technically, if you want to play it that way, luckily many founders don't choose that path that drastically, but theoretically you could get in a situation where founders keep on loading on safe notes, which is basically debt without being debt, without oversight, without sitting atop the the benefits of that basically. And in the end, you're noticing, oh, actually, this is worth much less than I thought, and I wish I would have known in the meantime. But with safe notes, I had no right to actually know. We've invested in safe notes too, right? And so it's something that we've just taken a decision. No, it's not our taste.
Who covers the cost of the legals? And if there is a safe note, also legals needs to be done as well?
Yeah, there's almost zero cost. Send out a piece of paper.
Yeah, it's a very standardized document. So it followed, I think, I don't know what you guys think, but in hindsight, I think we can all sort of conclude it followed a little bit the stock exchange logic, where you're trying to standardize the products, the instruments, the financial instruments so much that the transaction costs become very low.
Is it not the case that you can just tweak like 2-3 clauses and make it more reasonable, or for both parties, or that's not possible?
You could, but then you're close to a priced round eventually once you start tweaking that, and that's not the intent with which the other party then typically proposes to do a safe round.
Look, for all the founders that listen to this, one of the things that will show you're very mature is if you approach, because a lot of people need to raise angel capital, and convertible debt is a very good way to raise angel capital, but you can provide that investor some minimum certainties with a conversion, like convert in the next 24 months, a cap on the conversion, and a simple interest over the lifespan of the money sitting with you instead of in their investment account. And all of those things will show you're a little bit more sophisticated than someone who's sending you a safe. Because I know a lot of people now that aren't signing up. And people are like, well, this is the YC thing. Tell you what, it's becoming out of favor.
Amen. Listen
It's
to
kind
it.
of crazy that like we needed to lower the friction to giving people that don't deserve investment money so much that we standardize this thing, and we don't even care about the metrics. So here's just like an infinite money like printing machine. It's like crazy.
Yeah, it's the bar being elevated is quite a good thing.
Maybe it should be a little bit harder to raise. You know?
But at the end of the day, you can't force a founder to do something, neither through the safe note or through some legal expensive contract. Yeah. So it's only about ownership. Ownership gets allocated at some point in the future without the date. Yeah.
Maybe you could theoretically load it all on safes, and depending on what that safe says, I don't think that they convert in an acquisition. I think they'll just get paid out, or maybe they'll convert in a price round.
All right, Clifton. Thanks for coming.
I don't know. I don't know on that trigger, but it's just weird.
Yeah.
Damn.
So I'm sure I'll get some slack for my position on YC.
That's the aim. I wanted to. Okay, you guys, Martin, you posted something. Was it Patrick? You posted something about the hidden reason Anglosphere infrastructure costs more. Should we go into this? Martin, you had a hot take.
My take is that
let me show the screen. Hold on.
Yeah, you need to set the context.
Yeah. Actually, what was the context? Are you sharing the screen?
Can you see? Russell King. The hidden reason Anglosphere infrastructure costs more. Basically, what he's saying is it comes down to different legal systems. So countries in the US and UK and Australia use judicial planning systems. Meanwhile, European countries use corporate systems. Therefore, European countries, the infrastructure, is this what he's saying? Infrastructure costs more?
Yeah, but then I tried to Google what's more difficult to get a planning permission in London or in Paris, and it turns out that Paris is more difficult. So I don't know. My take on this is that I don't know what's the difference in process exactly between like European capital like Paris and London. I know, but I don't know what the difference is. But I would guess only that the difficulty is pretty similar to get things done, and the bigger the ticket of the project is, the more difficult it is. And that comes from the value of the land, actually, how difficult that particular geography is.
But help me understand what Russell is saying here, because I'm complete tourist in this world. I want to learn from this. So is it that Russell is saying, okay, in the what he calls judicial planning systems of US, UK, Australia, when I hand in, requests for building permit, etc., it can get challenged like a court case later, and he's claiming in mainland Europe, once it's done, it can't get challenged and it lies with the authority. Is that what he's saying?
Well, perhaps yes, but I think when it depends on what type of project we're talking about. Large projects, no one would ever try to even build or design 100 to 100 million pound or dollar project without discussing with local planners from councils, municipalities. That's not what's happening. So it is collaborative anyway at this point already. The court cases, projects get treated like court cases, whereas you can collaborate more with in European countries. I do not know. I don't have. I actually have European experience from my home country, and it actually doesn't comply with what is said here. But Poland is kind of now it's coming out of this post-communism and weird stuff that was happening there at that time. But it's definitely not collaborative. So
I don't think people would describe the development and permitting process in Germany collaborative either. I mean, always when you go with big projects, yeah, I mean, all of a sudden you might have an angle through the mayor and then people talk, right? But I've never heard someone say, "Oh my God, I'm so glad we collaborated so well on this." I've never heard someone say.
I think it's interesting that they don't just call out, like in the US, the big reason why infrastructure and public projects cost so much is just simply how they award this work. And like, it's very, they're alluding to it in these statements, but the fact that you are bidding on a defined set of plans, and it's usually low bid in that scenario, then anything that comes up where these plans are wrong is going to be a change order, which is going to delay the project, which is going to increase the fees. And just in that contract situation, like they're just going to cost a whole lot more. They're going to be delayed, and it's going to be very contentious, which is kind of floating around where that's why P3s are becoming more prevalent, public-private partnerships. It's a better delivery mechanism. So I don't know if there's a way to normalize to see if the traditional delivery method versus a P3 is actually more effective. I suspect it is. I suspect it might just be as expensive, but better at delivery date certainty, which is really good.
Land costs.
Yeah, well, I don't know. I think if we're comparing like London to New York to Paris, I have no clue. And I think best way to just try to figure it out is, I don't know who knows it actually. Maybe larger architectural companies would say something about it. My simple Google search showed that that's not true, what is written here. So now if we're comparing, I don't know, some land, 10 hectares of land in Poland compared to 10 hectares of land outside of London, it's way more difficult to build on 10 hectares outside of London than on 10 hectares somewhere in Poland.
I have a question for the Europeans on this.
There's 3 of them.
Yes. How do many of the European nations go about selecting, if it's not based upon lowest cost, who are the project participants? Because one of the reasons we do lowest cost is the government doesn't want to have a sense of like the perception that it is playing favorites. And so one of the ways is just based upon what dollar value are they willing to do it for.
Are you saying, Dustin, that they don't go for the lowest cost in the US?
They do.
Yeah.
I would say from my experience, 9 times out of 10 in the UK, even more than that is lowest cost wins. Money always talks. In terms of like public partnerships, I'm not sure. I know the UK, they're trying to be a lot more transparent with the process, and perhaps that changes things. I'm not educated enough to be able to say, but definitely in the private sector, yeah, money.
Yeah, so in my experience, there's this thing called, I think, EU tenders, and people find projects there and bid. But what's the how many points you get from the tender in the tender? It depends on the particulars of this tender and scope of the project. And I remember when I worked in Skanska like years back, and we were trying to tender for larger jobs. There was criteria like you need to have project managers working directly for you of number of minimum like 10, whatever, or you should have done 5 hospitals projects in the last 10 years within this region, having this type of equipment, this kind of stuff. So it's very subjective to the project type.
More qualitative factors come into play. Huh?
I mean, one of the things that this guy seems to be saying, again, I'm interpreting his AI written post here, is, hey, we create reports to defend against objections in the Anglosphere. Is that what happens when you build like infrastructure projects? You have to invite people for objections?
Yeah, that's true.
Okay.
Yeah. So like in the UK, for example, if you you submitting planning permission, I'm talking small, medium product. I don't know how it works, but for super large products, then people who live around, they can object, but there is a process to it, which will finally, you get into like a planning committee, and then planning committee meets up and then decide if this is viable or not. And usually this planning committee consists of 70, 80 years olds, who might have different incentives than the developer. And that's probably the reason why it's very difficult to get things done here.
I think that's not so different from mainland Europe, but it seems to me like there are nuances in how the processes work. I have a little bit of interest party experience, but I wouldn't call myself by any stretch of imagination expert. But with the experience that I've had, is the way it works in mainland Europe is typically everything is down to the zoning, and the zoning is very detailed. In the I think a lot of it is influenced honestly by Napoleonic code. I mean, that's actually that influenced a lot of the legal systems here in mainland Europe, and I assume that's also the fact for zoning. And so they are very detailed, the zonings. And if you want to change zonings, good luck. That's going to take a while, but that also means that someone handing in a project that spans lots, that perhaps is going after infrastructure, etc., as long as you're to the zoning, the objections will not be successful. Okay, when you then need to veer outside of the zoning, within that process, typically when you talk to the municipality that oversees that, or sometimes the federal state that oversees that, there's a very specific 6 to 8 week window within the overall process that is defined. It gets put up on a website. Hey, this is the time frame during which you can hand in certain concerns. The concerns need to be very well substantiated, not necessarily by a law firm. That's not the requirement, but typically they need to be very well substantiated. And then there would be a commission that looks over that and even decides, hey, is that worth bringing up? That's a little bit different. Dustin, help me out here. I think that's one of the key differences between the US legal system and perhaps the mainland European legal system. So in Europe, I cannot just file a suit either.
That's right.
I actually have to qualify why I think it's worth having a suit, and then a judge would oversee, yes, I'm going to allow the suit. Whereas in the US, I think the bar is a little bit
very,
like
very
the
low.
burden.
And,
right?
And you have loser pays, right? If it's frivolous or it just costs... right, we do not offer
you the legal cost, yeah.
Yeah, so there's a lot of political organizations that will postpone developments for environmental reasons or whatever they would like. It's also hyper localized. So like the zoning, if you go to Houston, Texas, there is no zoning. You see very tall buildings right next to very small buildings, and they allow you to essentially build whatever the heck you want. But if you were in California, then, and you even want to do some work on your house, there's a permit and people can go and vote on it and raise objections. And it's like, wait, I'm trying to do something in my own home. And
Same here.
Same here.
Yeah. It's
and
insane.
they put notices on the lampposts outside
notices
the houses
on everything.
And stuff,
Yeah.
We don't have that here.
I actually agree with this point, because I was trying to get like a planning permission for a place back at home in Poland, and you need to know what your ridge level is. You need to know what's the width of the building, what's the length of it, and where the entrance is, and that's pretty much it. Whereas here, the planner can say, oh, this window is too big. It is overlooking your neighbor on the left-hand side. And we would like it to be slightly to the left. Like you get into so much detail, and perhaps that is causing, like talking nonsense about these things is causing the large delays that the author is talking about.
So that part, the last part that you described, you will still have that over here, where it's like interpretation of the local code. So you would still have that, but whenever someone built that's typically like several weeks of a process of actually collaborating with the authorities. So that part of the collaboration, if that's what Russell alluded to, that I can confirm that happens. It's not a fun collaboration, but it is they talk to you. And it wouldn't be, oh, my neighbor can object over that. They would actually have to, it goes through the person overseeing the implementation of it.
I think that's one of the biggest roadblocks we have, is how anyone can lean in for any sort of reservation against a project and significantly deter. And I think it's hyper localized. I just am now reflecting on the city of San Francisco that I reside in, and
yeah, because it's San Francisco. Yeah, that's why it's not so easy to do it as well. If it was somewhere in the Midwest, it probably would be easier. And that stems from the land cost and everything else, every other layer on top of it.
The best neighbor is no neighbor.
That's true. That's true.
Wonderful. Should we wrap up?
Yeah.
Cool. Okay, guys. Next week, I think we need to... I'm not sure we will have an episode. We shall see, but we'll sort it out between us. And yeah, thank you, guys.
Hey,
let me just stop recording here.
Next week, I'm at Advancing